Hello guys, welcome to the chat. Another day for technical analysis and the crypto space. The market is very much aligned. The market went down, and I promised us yesterday that I would be making another post. Well, I promised that to be done yesterday evening, and we are doing it today. Whereas, so the crypto space has been looking the way it looks. We observed a massive return yesterday, and I was saying it wasn't a break, a fall down yet. It wasn't the market dipping, but it was rather a correction. I stated it yesterday in my video I uploaded yesterday, that the market is rather correcting. So let's look to see what actually the market is doing right now, to know if actually it's correcting, it's making a corrective move, or the market is out to slay us all. Yes. So you would have to permit me to delete some of this previous analysis I did. Okay. So yesterday, yesterday the market closed with a bearish engulfing. Now, the market closing at a bearish engulfing is trying to tell us that the bears really took charge of this market. But how do we know if really the bears are taking charge of the market to take over the market, or they are taking charge of the market because the bulls have bought it for too long and they want to be part of the fun the market is having. They want to be part of this fun the market is enjoying. So how do we know? How do we know per se? How do we know? Now let's check on our weekly time frame. Now, seeing through the weekly time frame, we realize that Bitcoin just came to a level of resistance. Yes, just came to a level of resistance. Let me shrink through so we see it was serving as a support here for a while, and Bitcoin is at a very important level of resistance. Like I said, a very important level of resistance. This is a level where you have to be careful how you trade what you trade on, and how you trade on the market. So Bitcoin is on a whole new level of resistance that you actually need to be careful of. You actually need to be careful of. Okay, so at this point, I don't even have any Bitcoin. I'm not trading Bitcoin right now because I need to be sure the market is sure of what it's about to do. So the volume that last week used in closing was a good volume, but this pattern that is forming is a bearish pattern. This pattern, let me mark it out for us. This pattern is a bearish pattern. Why did I say so? So many rejections on the bullish side, giving us so many dojis, so many rejections. The bears rejecting, the bulls rejecting, and this. So many patterns. Now, which volume brought us this far? Which volume brought us to this level once we are seeing this market as a resistance base? If we are to check through volume or fundamental analysis, we would get to understand that the sellers brought us this far. This zone, this zone, this zone. So we've got 3 consecutive sell volume that brought us this far. Now, the major buy volume that helped in this market was this zone. So this buy volume need a supporting buy volume. What am I trying to say? The buyers at this point of the market needs another wave of buying pressure to make this market blow through to the 36K level. That's what I'm saying on Bitcoin. So on the weekly time frame, Bitcoin is in a resistance, is more in favor with the sellers. Why? Because it's at a level where sellers could start pushing it back down. But with the recent volume that the buyers pulled into the market, there could be a change. So now we have 3 days, 16 hours for the buyers to take over in sense of where the market might be pushing to. But don't misunderstand me. The sellers are in advantage because this point where Bitcoin price is 28 at the point of making this video, 28K is a very dangerous and solid level for sellers to stay in the market. Now let's jump to the alleys to confirm what we are saying. Now let me delete this. Let me take this out. Okay. Now let's see something very quick. This, let's just pick it from here to this level. Okay, so this is Bitcoin price on the alley, right? So this is Bitcoin price on the alley. What is it possibly saying? The question you are to ask mostly in any chart, in any time frame is, who are those in charge of the market? And that is why you actually need the volume to tell you that. You actually need the volume to tell you those in charge of which market you are observing on what time frame. So now, on this time frame, the sellers took charge of this market. So as of this moment right now, it is justifying the fact I said on the weekly that the sellers are in strong advantage right now. Why? Because we are at the position of resistance on the weekly and also on the daily, and the sellers has already dropped a massive volume. They have already pulled a pressure into the market to shy off the buyers. So guys, as of right now, sellers are firmly in charge of this market. And I, for one, would be waiting for something like, okay, let me on my indicators to see. Okay. Yeah. I, for one, will be waiting for a very slight retest, very slight one. I'm still waiting for it though. I'm still waiting for the market to move something like this back to like 29k 200 for me to see another good volume to push the market short. Why? That is what the market is looking at right now. So I would advise you stay out of the market for now. Don't go neither short nor long. None of them. Don't go anyone. Just observe the market and wait for a good volume. Technical analysis is all about observing the market and seeing a position whence you could enter the market with volume. There's no way you can trade the trend of a market when you don't understand the concept of trading by the volumes. And there's no way you could profit greatly from the market when you don't understand the concept of patience and observing which volumes, which and which people are in charge of a particular market you are wanting to invest in. So for now, I would advise wait for the market to give us a volume, either to the buy side or to the sell side. Now, if for any reason the market shoots and gives us a buy volume, observe, just wait. Now, let me run us through some trades I'm looking to go in. I'm looking to go in RNDR USDT perpetual swap. Yep. So on the daily, let me just brief us very quick what I did and what I'm waiting for. So I'm waiting for this arc. If for any reason there is to be a breakout, I'm waiting for this arc to come and recreate itself outside. Yes, I'm waiting for the arc to come and recreate itself outside. That is exactly what I'm waiting for. And the position at which the arc breaks out from is the position at which I am targeting. Now, this trading pattern, I invented it myself. Yes, this trading style was invented by myself. Now, how does it work? I observe the arc and its breakout. I observe the arc and its breakout. I measure the arc accurately, and let me just delete this guy. I measure the arc accurately, and I do what? I duplicate what I've measured. I duplicate it, right? Now I've duplicated my arc. I pick this one, take it up to a possible level of breakout, and what else? No, sorry. I reverse it. I reverse the arc. I try to measure if it's same as the order. Okay, so now I think the arc is accurate now, right? Now I pick it to a level where there could be possible breakout. Now this is a possible direction the market might be pushing towards. Now via this arc, I could get my take profit and first take profit, second take profit, and what have you. How? Very simple. I take profit at every hit of the arc. I repeat, I take profit at every strike of the arc. Every strike of the arc, sorry. I bring the arc to the middle. I take profit at every strike of the arc. That's just it. Every strike of the arc. What do I mean by every strike of the arc? Now, through the walls of the arc, there are level, potential resistant level that we might not see, right? So what were the levels that the market struck at this place, at this point? Now let me pick them out. Let me select them out very fast. There's this level, there's this level. Okay, we mark it. This level, yes, this is a resist, this is a support, this is another level, and finally this is a third level, the third level of the arc. So that is it, guys. That is it. So at these few levels, I would be taking profit. I've got 3 levels to take profit, and this is my arc. So guys, this is how I create and I recreate my own analysis. This is how I create and I recreate it. This is how I create and I recreate it. Okay, now we'll see in our next video. Please be smart. Please don't jump into the market for no reason. Don't just jump. Observe, observe. Now another trade I'm in is Cocos. Cocos. Now I'm looking to go long on Cocos, and this is it. This is it. This is it. This is it. So I'm waiting for this breakout, and I'm observing on my 15 minutes, 45 minutes. I'm already ready to go. Why am I ready to go? Why am I not waiting for the breakout and then the retest? Why am I not waiting? I'm not waiting because the resistance here was already proven valid. So for any reason that the price breaks through this resistance that has been already proven valid, is justifying the fact that this volume, this buy volume and this buy volume is kicking into this market. Now for those two buy volume to kick into the market, they need momentum as strong as the two of them. Now giving us momentum as strong as the both of them is justifying the fact that we could hit our first target before a retest kicks in. And our first target before a retest kicks in is at how many percent? Let's check. Okay, a whooping 20%. So it might not get to the 20, might get to just 10, might get to 8, might get to 7, might get to 5, might get to 15. But the goal is once you see a selling pressure that surpasses your active trend pressure, you take something out of the market and wait for a retest.